I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is James Corbett, publisher of the CorbettReport.com and editorial writer for the International Forecaster. He's speaking to us from Japan. And first of all, James, I'm glad to see that you're safe after the last major earthquake to hit Fukushima.
Yes, there was a fairly large earthquake the other day, and since we're on the other side of the country, obviously we didn't feel it directly. In fact, the first I heard of it was from my video editor in Australia. So when I checked the news, and there was quite a bit of worry about the possible tsunami that would be generated, and they were predicting as many as 3-meter waves, but when it eventually arrived, I think the largest recorded was 1.4 meters. So it was not quite as bad as expected, and of course nowhere near the 40-meter tsunami waves that we saw back in 2011. Still not a good thing, and pretty worrying to see what they are now saying was essentially an aftershock of the 2011 quake occurring right there in that very, very precarious region. So I think we're all still waiting and watching nervously to see what unfolds in that area.
The Japanese Prime Minister, probably one of the very first international leaders to meet Trump face-to-face.
Indeed, and it is probably not on terms that he necessarily wanted. In fact, Abe had been meeting with Clinton on the sidelines of the UN General Assembly back in September, obviously on the assumption that she was going to be the next president, and I think that their talks were probably swirling around the Trans-Pacific Partnership deal and the U.S. ratification thereof. But now Trump is in, and Abe is going to have to deal with a Trump who has, in the campaign at any rate, talked about basically making Japan provide for its own military security and leaving in the ellipsis of that moment perhaps the potential for Japan developing its own nuclear weapons program, which was not really a political starter here, but also perhaps more to the point and more pressing, the fact that Donald Trump has announced that his administration is not going to ratify the TPP. That is a huge blow to Prime Minister Abe, who has invested a lot of his political capital in building this up as a trading deal that was going to be a boon to the Japanese economy. And it did involve certain concessions that certain people here would not have been happy with. Farmers, for example, were quite upset about allowing cheap outside imports of rice and other commodities that right now are tariffed. They would be allowed in under the deal and things like that. But ultimately, this was supposed to be a deal that would improve the economy overall without having to have anyone laid off or anything of that sort. Now, the entire deal itself is coming under question because without the United States, there is a huge gaping hole right in the middle of the deal. In fact, the TPP, although it involves over a dozen nations, really centers around Japan and the U.S., which accounts for 60% of the GDP of the entire TPP area. So really, the U.S. is an integral part of this, and Abe, as I say, has invested his political capital in getting this deal passed. And there was a lot of angry criticism about the way that his ruling party rammed some of the TPP-related legislation through the lower house of the Japanese parliament against the very vocal opposition of the opposition parties. Now that is not looking so wise because now, of course, the deal itself may not be going ahead. So all of that political capital spent seemingly for nothing, it does leave Abe in a very embarrassing position. So although he and Donald Trump were among the first people to meet in the new Trump administration, it doesn't look like the relationship is off to a great start.
Now, apparently, Abe gave Trump a gold-encrusted golf club worth about $4,000. Does it look like Trump's going to be the kind of guy that can't separate business and government?
I imagine that people who have watched his campaign and watched the type of character that he is will probably understand the type of administration he's going to run. And I think he adequately advertised that during the campaign, which is that this is going to be about getting deals done. And everyone knows how to deal with a businessman. And so I think that's the way that foreign leaders are going to approach him and his administration. And there may be certain benefits to that in a way, I suppose. It eliminates some of the diplomatic finesse that otherwise would be necessary and gets more to the point. But it does, of course, leave that giant door open for really more of a kickback level of diplomacy than we've been used to seeing in the past. So, yes, I think that's a pretty interesting portent of things to come during the Trump administration.
Of course, there are two things that would get you impeached in the U.S., treason and accepting favors from foreign governments.
Unless your name is Hillary Clinton, but yes.
Yes. Well, again, if you declare a president, maybe it doesn't matter, or they're supposed to be able to see beyond it, or if it's over a certain value, you're supposed to return it. I can't see Trump returning anything if it's got gold on it.
Well, gold and shiny objects seem to be his particular fetish. So, again, we'll see how this plays out, and it's going to be an interesting few years regardless. And on the bigger scale of the types of deals that are coming into view, I think the interesting aspect of this is that although scrapping the TPP is extremely popular and will be a popularly received move with, I think, a lot of the public, both in Japan and in the United States, it is not a politically popular move with the political establishment, which is probably why it is so popular. But there's an interesting aspect to this, which is that the fact that the U.S. won't be ratifying the TPP does leave this giant space in this region for a trade deal to come about without the United States. And at least one player that has to be on the outside looking in and seeing how they might be able to take advantage of that situation is China, the big excluded part of the TPP. Of course, China was not a signatory to the TPP, but they may be a signatory to whatever comes along to take the place of the TPP amongst this region where obviously there is a hunger for a type of trade deal. So it's interesting to see whether ultimately this might actually serve to empower China's role in the Asia-Pacific.
And Justin Trudeau, Canada's Prime Minister, has already been meeting with international business leaders and political leaders, saying Canada is wide open for international trade. We believe in international trade. Would that give Canada a leg up and a doorway into North America for more dealings with China?
It certainly could. Canada-Chinese relations have been, I think, fairly strong in recent years. Harper certainly did do his best to foster them and did take a couple of trade missions over to Beijing. So I think that helped to foster some of those connections, and it seems that Trudeau is leaving the door open for more of that. And in fact, the Liberals just recently held a meeting of international institutional investors that represented more than $21 trillion in assets to generate support for the government's $35 billion Canada Infrastructure Bank, so which they're hoping to basically leverage global backers to invest in. So clearly, Trudeau is kind of opening that door, and as you were pointing out shortly before we started this conversation, people like Richard Branson are pointing the way to Canada as a quote-unquote beacon of light for global investors, saying that it's a breath of fresh air, and we need a country like Canada that abides by the rule of law, talks good common sense, and has a prime minister and a cabinet that has a heart. So I think that type of rhetoric, we're going to be hearing more of that as the Donald Trump administration settles in, and I think people are looking for perhaps a different entryway into the North American market.
Is there an isolationist mood in other places in the world, or does Asia look at cooperation as being the way to go, not going on your own?
Once again, I think there is a disconnect, very much like in the United States, probably similar in Canada, between the political class and the everyday average worker. I think, like here in Japan, the average worker probably does not see the need for these grand trade agreements that may or may not benefit the economy in some sort of vague way that doesn't necessarily translate into extra money in their pockets. But the political class sees a lot of political advantage to this, and in the macroeconomic view, there's trade advantages to be gained and things. So I think there is certainly political impetus for these types of trade agreements in the Asian region, but I think there is a fair degree of populist sentiment amongst a lot of local populations here that does not want to see that come about. And that is fanned by the nationalist tendencies in a lot of different countries here. For example, in the East Asia region specifically, Japanese nationalism, Chinese nationalism, Korean nationalism, we see it flaring from time to time. They generally flare in contrast and in opposition to one another, which greatly complicates the idea that this could be an easily tied together region with a nice trade pact. There's a lot of national competition that goes on that, and I think the politicians have an interesting game to play because they like to fan those flames of nationalism and invective against the enemies, but they also want to foster trade agreements and like the TPP. So it's an interesting tightrope that they're walking, and ultimately that tightrope can become a noose if they get into the wrong position.
We'll have more with James Corbett right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with James Corbett. James, how is China's economy doing right now? And especially if you focus on real estate. Apparently, the Chinese are the most invested in real estate in the world.
It's true, and I think there are cultural reasons for that. I think there are also practical reasons for that. Certainly, real estate is a nice, solid investment that isn't quite frittered away in the same way that monetary considerations can be. And I think that's important for investors who generally, especially when they're seeking to engage in international real estate deals, are looking for ways to basically get out of the yuan and into something stable. So real estate is a nice, handy way to do that, to have sometimes literally a foot in the door in another country. So that's, I think, the holy grail of a lot of investors that are looking to make sure that the nice money that they've made over the course of the Chinese boom doesn't get frittered away as China tries to wrench its economy around from an export-based to a domestic-based economy. So there's a lot of not growing pains, I guess the reverse, the slowing down of growing pains that China is working itself through, and the real estate boom is one expression of that. And as I say, I think China is now in a precarious position because, of course, President-elect Trump has talked up the idea of putting in levies and tariffs and barriers to trade with places like China. So that directly threatens what has been the back of the Great Chinese Boom, which has been its export relationship specifically with the United States. So China is now talking about the idea that they may have to retaliate with their own levies and tariffs and pursuing their own trade agenda, which they're already doing with the one road, one belt policy that they're laying out to try to connect China to partners all across Eurasia, all the way into Eastern Europe, and which they are working on investing in the infrastructure for right now. So there's a lot of investment that's going on, and it remains to be seen whether they're going to be able to weather the storm that looks like it is brewing right now as the Trump administration is looking like it's going to start strangling that export relationship that China has relied on so heavily over the last decade and a half.
With Chinese real estate, it also appears they don't mind putting their money and efforts into real estate in established cities, but there's still very little interest in all those artificial cities they've built out in the middle of nowhere.
Yes, the artificial cities are mostly for the expenditure of building them, and is a way of spending some of that capital on the construction industry primarily, but within the country. And that is one of the ways that they are attempting to put to use this incredible tidal wave of credit that has been unleashed, certainly over the past decade and a half, and specifically over the past 7 or 8 years. There's been just a tidal wave of credit created in China, and a lot of that has been spent in infrastructure build-out. And once you've built out the core infrastructure, you start investing in things like cities in the middle of nowhere for no one. And of course, that isn't seen as a real investment opportunity, because that would imply that people were actually going to be living there and growing, and it was going to be a going concern. I think this is seen as kind of like the bridge to nowhere. It's about the building rather than about the actually having that as an important integral piece of infrastructure. So yes, the real estate boom in China itself is certainly centered on the established cities where the actual economic activity takes place, where people live, where people work, and where people are increasingly moving to as China undergoes the largest human migration in the history of the world, as we start to see this incredible, mind-bending influx of hundreds of millions of Chinese poor working-class peasants from the countryside into some of these major urban centers. And China is going to have an incredible headache in its managed economy, trying to manage that transition in a way that people can afford to live in these cities that are about to become a whole lot more crowded.
Do they have any plans to move people from rural areas into these empty cities?
I would imagine that has to be part of the plan. But again, it's a question of chicken or egg. Can you move people into a place with no economic activity, no industry, no organic reason for people to be there, and then they will create that? Or does there have to be a reason for people to be somewhere before they will go there? And I think that you can certainly force people into an area, but unless there is something for those people to actually do in that area, it's doubtful whether that will succeed. So it's going to be fascinating to watch, but it could turn into a nightmare for people who are caught up in this, and perhaps not so different than their normal nightmarish life living in the kind of managed economy at the moment.
Well, what a couple of things those artificial cities are missing: they don't have universities and they don't have factories. Maybe they should have built those first or at the same time.
Yes, well, that's really the point. I mean, again, if there's nowhere to work, then there's nothing to do. You can watch documentaries about this on YouTube. There's one from the BBC, for example, that shows one of the shopping malls that is in one of these artificial cities is essentially a ghost city. There's a few thousand people that live there out of a capacity of several 100,000, and the shopping mall is filled with stores that are completely empty. There's a security guard basically manning the shopping mall complex, but there's no one working there. There's no one buying anything there. It's just a vast nothingness. And again, you can just kind of cram people into that situation and hope that they will spontaneously start filling it out. But really, again, without an industry already being there to employ people and to make things actually start to get going, it seems doubtful that one can just force that into being.
Well, maybe they'll have to treat those cities like the way Canada and the U.S. treated homestead land. My parents bought up some of the very last homestead land in North America in the late 60s for $5 an acre. Maybe you have to offer condos and houses to people for, a lot less than you would have to buy one in a major city.
This is a fundamental point of economics generally, that there has to be an incentive factor for people to develop something. And if there is no incentive for people to do that, then why would they do so? It seems like a pretty basic point, but it's one that you might imagine might be lost on the Chinese government that is run by a Chinese Communist Party that has certainly abandoned some of its principles, but still at least gives lip service to the idea of a managed economy. So, yes, obviously incentivization of people moving to these areas by, for example, giving them certain areas of land that they can develop as they wish would be, I think, probably one of the only rational ways to do it, and one of the only ways that would be productive. But it's difficult to see if the Chinese government on its 5-year plans and in its highly micromanaged society is going to simply throw people into a situation like that and hope that they'll swim.
How have the Asian stock markets been doing? In North America, the Dow hit a record high. Any excitement about that? And again, the local Asian markets?
Well, it's interesting. People are reacting in a mixed way to the rising Dow. I think precisely because we saw so much rhetoric in the run-up to the election, to the effect that if Trump is elected, the market's going to fall out, exactly as we heard about Brexit, and yet the exact opposite has happened. We've seen a rally since Trump has been elected, exactly as we saw a rally after the Brexit vote went through. So that's putting egg on a lot of people's faces. So now they're trying to say, well, 19,000 on the Dow is a meaningless number, which, to be fair, it is, but it was a meaningless number when they were celebrating the 18,000 mark, for example, or the 15,000 mark. They're all meaningless numbers, but for some reason they celebrate them at certain times and not in others. There is actually some similar rallying type of effect going on in Asia. In fact, futures are flirting with records as Asian stocks rise. But the commodities and the dollar are flatlining, so it remains to be seen whether there's anything behind this and what exactly is the euphoria about this. In fact, there are worrying signs on the horizon that are pointing through in certain markets. For example, in India, the rupee has just hit a near record low as $2.8 billion of capital has just fled the country. Not in relation to the interesting demonetization that the country has just gone through, taking out 80% of the country's cash from the currency system and making it not legal tender, but because the Federal Reserve is highly expected to raise rates next month. And so just as back in 2013 when the Fed announced that it was going to be ending its quantitative easing, now again we're seeing a lot of dollars getting pulled out of emerging markets where it had been going, and back to the United States. So it looks like that's exactly what's playing out right now, for example, in India, and pushing the rupee down to record lows. So the Reserve Bank of India is coming in and having to do massive intervention, selling lots and lots of dollars into that market in order to try to prop the rupee up. And that's a sign of what we might expect to see unfolding over the next couple of weeks as the markets start to prepare for the expected rate rise.
Well, what did India expected to happen if all of a sudden you declare your large denomination bills illegal and non-valuable?
It's not even large denomination per se. There 1,000 rupee notes are relatively large, but also a much smaller amounts were made non-monetary. Really, what that was about was taking the most commonly circulated currency notes and demonetizing them, so that people would have to bring them in to exchange them or to park them in the bank in order to get the newly issued notes. And that is being done because in India there is the problem of what they call black money, which is basically money that is traded amongst people via cash transactions that are not registered and not taxed, and which the Indian government does not oversee. So this is really a massive, incredibly massive effort to clamp down on those types of funds and on cash transactions that the government doesn't know about, and to get that money back on the table in a way that they can see and verify and tax and track. And so it's a pretty dramatic move, and it has caused chaos, a lot of chaos in the streets of India as people are flocking to banks. And of course, like anything else that the Indian government ever tries to do, it comes with 100 different stipulations about how much can be withdrawn on what days from what types of ATMs by what types of people working in what industries. So it's caused mass confusion, and it's been quite a boondoggle. One will assume that India will get through this as badly as they have managed it, but what is going to occur on the other side is another thing, especially for an economy that as much as 20% of the economy, it has been estimated, is this so-called black money that the government doesn't track and doesn't know about and can't tax. So it's going to be interesting to see how people who have been thriving on that black money are going to be able to survive in an environment where they suddenly have to declare all of that money.
Are people trying to smuggle that cash out of the country and cash it in at banks that might still accept it?
I don't know if there is a possibility to do that. I assume there must be a black market for that would take it at a heavily discounted rate, but I certainly don't know of any official institution in the world that would accept those notes now that they have been officially demonetized by the Bank of India. So I'm assuming that there is probably some ways that people will try to get whatever they can out of it, whatever small percentage. But I'm not sure that there's really much that can be done for people in that situation other than to take the hit and exchange it with the government's banks or post offices and put it back into the system.
Well, we've talked in the past about countries and their war against cash. In Europe, you can't take out more than 750 euros. Other places have cash restrictions. How soon before governments decide that cash just is not going to be viable and you have to use plastic instead?
Well, this is just one worrying sign on that road as to what that would look like when and if and as it happens. In this case, it's not necessarily that this move in particular was about that, because they're replacing these 500 and 1,000 rupee notes that they're taking out of circulation with 500 and 2,000 rupee notes. So even a larger denomination is going to be made available, or is being made available. But I think we can see how this could be enacted in any given country that wants to suddenly take a type of currency out of circulation. They could simply declare that your $100 bills are now no longer legal tender. You have to turn them in. Now we will give you new $50 bills in return. This is the type of process that could be used. And since government after government after government has talked about this, has commissioned studies about the transition to a cashless society, and has implemented policies to try to encourage this, and has started various programs to try to transition the economy into a more cashless-based financial transactions, the writing is on the wall. This is clearly where the majority of countries on this planet are heading, and it's really a question about who is heading there the fastest. And there are various ways that people can calculate how many transactions, what percentage of the economy is already cashless. But it looks like within the next several years, we're going to start seeing the first countries that are operating on a 100% cashless basis. And I think it's not inconceivable that, in fact, India might get there, if not first, at least one of the first. Even people like Bill Gates was praising this recent demonetization by saying we are seeing, the new level financial instruments, the electronic financial instruments coming into view, and it's possible that India will be leading the way, which is actually a pretty scary statement considering that there are hundreds of millions in India who are not part of the banking system, who are among the poorest people in the world, who are going to ultimately have to sign up with banks and get registered on the government ID system in order to have access to that economy, which, of course, I think is ultimately the point. And these types of moves are ultimately going to end up squeezing the people at the very bottom end of the economic ladder the very most, which is probably why people like Bill Gates are so gleeful about it.
James, thank you so much for chatting with us.
Thank you for having me on.
My guest has been James Corbett, publisher of the CorbettReport.com and editorial writer for the International Forecaster. He was speaking to us from Japan. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.